Good morning, YouTube. It's Jo here with Kambio for the people. We're building a fully automated AI-based options trading system. Every day, we place trades with our AI agent CARA, then we debrief with Claude to analyze the session. Super raw and in the open for all of you to see. Nothing discussed is financial advice and is for educational and entertainment purposes only. Let's start with the daily summary. Actually, before we do that, let's talk about what Claude and I found last night. So yesterday's debrief, or last night's debrief, if you watched it, we had noticed that, let's go to CARA, that CARA was selecting the wrong strikes yesterday. So let's go. So the best trade right here, right? So we had a short of 155 and a long of 150 on the put side. But after I analyzed it, I actually opted for the 145, 150 instead, and that was because the 155 was actually a delta of like 0.27, 0.26, something like that, and then the 150 was actually the 0.2 delta. So so we definitely wanted to be at the 0.2 delta. So we debriefed that with Claude, and basically, let's find it here. Yeah, so see, here's the structure that CARA had, right? So basically, CARA was thinking that the 0.2, the 155 was actually the 0.2 delta. So we had a discrepancy in the Black-Scholes model. So we went through a couple different iterations, and Claude was trying to find kind of like what was going on. So look, so we started doing some. So I told him, yeah, it was like 150 because it was a 0.2. So that was he's like, okay, well then we have some sort of discrepancy, right? So he's like, okay, this is what we got from Yahoo's live data or whatever. I don't think that's actually the live data. It's just some calculation that we were using. So we have two places where we calculate the delta, and that one of them is on the daily summary, and one is in the selection model. So so you're going to see that, that's kind of like where we ended up. So basically, TOS live, that's thinkorswim, was calculating at the 150 at 0.2, and then 155 was like at 0.26 or 27 or something like that at the time, and we were calculating it at 1.19 and 1.10. So that's where the discrepancy was. That's why CARA keeps giving me selections that are not the right strikes. So we went through a couple things, analyzed it. I think at first Claude was like, I think it's like an IV input, implied volatility. So see, like we were using Yahoo's implied volatility of 45, and that was giving us the wrong information. And then I was like, are you sure? So I go, walk me through how you came to the conclusion of IV being the culprit, right? So I was like, just give me some examples. I want to challenge you to basically like make sure that we are actually putting the right fix in place. And then lo and behold, so we run the calculations off of fresh data that we pulled. So see, you can see Claude pulls the data right here, and then we run these calculations, and then obviously we're basically not looking right. So he's actually calculating based on the midpoint between bid and ask spread. So so these calculations are basically not matching up. Basically, so there's like 097 and 071. That's Yahoo's IV, and this is like calculated IV. So basically, it's like, okay, that's yeah, so it's not matching what Black-Scholes says it should match. So you're like, okay, so what's left? Walk through. So we started walking through more things, right? Like, okay, that's not fixing it. That's not fixing it. And then ultimately, let's see, lower than 39. So like, okay, the missing piece is it's got to be IV. It like kept getting stuck on IV. So solve IV from the middle. Yeah, so I was telling you, it was like usually I try to include the entire. So if I go to thinkorswim, let's say we're doing Vive, that's the trade we did yesterday. So when I do place the options chain, at first I was trying to include this entire chart right here in my screenshot when I send it to CARA. Well, first of all, this laptop is too small, the screen. I usually trade on a bigger screen. So but when I tried to display all the legs here but also include this chart here up here, because this shows the deltas, it shows the open volume, it shows, I added this IV column, you'll see later in our conversation, but this is what actually like allows us to compare. So I was telling, like, that's why I wanted to include those, so that we can kind of make these kind of corrections and redo our math. So he's like, all right, well, why don't you pull it for me right now? So I pulled it, and then you'll see. So boom, so right here I pull it, right, and then we're like, all right, well, that gives me some good information. Let me just recalculate all this stuff. Okay, so now we look at our our math and, like, our model, our algorithm stuff, and he's like, okay, now I can basically recalculate this and figure out what's going on. So so take or swim, R's, and then with the price implied IV, so same IV. So didn't really solve it yet, but getting there. Hold on, let me just, so he's like going back, wait, hold up, let me check myself. I'm gonna go back and just recalculate some stuff. Obviously I'm just like glancing over all this, like, very, very fast version. So it's like, okay, what else could be wrong? Yeah. So I'm like, okay, now, so we decided, okay, let's do a test tomorrow when we have live data, because they were like, okay, I think the data is like out of date or whatever, because the market was closed already. I think it was like, I don't know, so 9 hours ago, that's like 11 something at night. So we were working on this late last night. He's like, okay, well, maybe the market data is like just stale, so let's try it tomorrow. And I'm like, okay, well, how do you see the test going? Maybe we can just take, over a 30-minute period of time, we can do snapshots every 5 minutes, and then we can recalc, and then try to see where our math is not matching the charts, right? So, and then so it's like, all right, and then, oh, because if you look at this chart right here, I didn't have the implied volatility here yet. So see how I have this new column here. So he's like, I need to see that implied volatility, and that's going to basically, that's the missing piece that allowed me to calculate all this stuff, right? So I'm like, all right, well, let's go through, let's do another screen cap. So I showed him this, and he's like, no, that's not it, because that's like this IV column right here. That's the overall IV. It's like a blended IV for the entire chain, right? So the entire stock. So he's like, I can't really use that. So then I'm like, all right, well, I found, he explains how to, here. He's like, here, do this stuff in order to, where is it? I don't know, somewhere inside here. Oh yeah, the gear right here is like, okay, buy the strike, press the gear, and then add this column. So I go over to here, and I grab that strike, right? I add that implied volatility, and then recap. So I send the recap, and now I have the IVs, right? So now he's like, okay, well, that was the unlock right here. That's it. So now he's able to recalc and change our math. So it's like, I fixed it. So this is what Thinkorswim has. This is our current one, and then this is our fixed math. So you can see how they match now. So, and it's like all 11 strikes match after our math fix. So he's like, okay, this is the formula that we were using right there, and this is what this is what the fix uses. And then it was basically this, this divide by square root of 2, that fixed it. And then he's like, all right, well, that's the fix. Let me just go ahead and start looking at that fix and try to implement that into the code. And then he noticed this normal CDF method that we have, that we were using for the selection model. And then did a general search for Black-Scholes or whatever. So because Black-Scholes is what basically, that's the math, that's the formula that calculates delta based off of, I believe it's price and IV or something like that. So yeah, so then we found that we've got this normal CDF plus this BS delta also, and then so we were yeah, so it comes from this Black-Scholes library. So that's what I was mentioning last night, that we had a Black-Scholes library in place, an npm package that we were using, either TypeScript or Python or whatever it is, right? But we were using the Black-Scholes library in one place, which is the daily summary, and then we were using this hand-rolled version of Black-Scholes in the selection model. So now, instead of like, okay, I need to fix our math, it's like, oh, I just need to pull out our manual roll, our hand-rolled method, and then add back in this BS delta from the Black-Scholes library. So that ended up being the fix. And now today our summary should have the right deltas being calculated, and also our selection model should have the right deltas being calculated. So this is actually the perfect type of fixes that I wanted you guys all to see, because going through the daily trade every single day, and then you find, okay, this doesn't match, or the model wasn't able to select the proper trade, and then we find this type of problem and we solve it, and then the next day we have an opportunity to see if it turns out to be the right trade that day. So that's what we're gonna do. So anyways, that's kind of the fast version of what happened last night. I didn't want you guys to sit through the whole interaction with Claude, because it's like hours of work. So that's a summary for you. So here we go. Let's do our daily summary today. So this is gonna see how we're doing. I saw a couple, yeah, so we got a couple actions here. Let me see, approaching short, AMT, I saw that one. So you can see it's ITM right now. Let's go back to here. So this AMT is ITM right there. So that's not what we want. Whenever we see these ITMs, it's not a good thing. So we want to try to avoid those things. So now we're going to kind of see, discover why it got there. Was it the wrong trade to begin with? It's still looking like sideways. RSI is 36. And a MACD, bearish MACD, which doesn't match. So it's kind of still on the, we'll have to look at it on the chart, but let's address BKR first. 34-day 80 sideways. So it thinks that we're in trouble with BKR, but we're not, because we already did a flat exit on the put side, I think. Oh, these are so big. Okay, so that's, I guess, a better view. So let's see, I think our BKR is, yeah, so we're only on the call side right now. We already flat exited the put side because we rolled it one time. So this BKR trade, I was trying to explain in yesterday's video, is one of our first trades, and I think we opened it at like 54 DTE or something like that, something super, super long, because before we had a 3-week trading cycle where it was like, okay, let's hold this for whenever we open it, DTE, and then like we'll assess 1 week, and then the second week we'll basically put it on kind of like an alert state, and then third week we're going to be trying to get rid of this thing, right? But I didn't really like fully understand like the theta decay, like where that good theta decay benefit is. And then we kind of like, this is like maybe, I want to say this is a conversation I had with Claude like last week or something like that. So we were like, okay, well, when does theta actually accelerate, right? So you could have this long, option chain, expiration, and that first, if you're at 54 days all the way to 30 days, you're basically barely making any money. So it's like this really, really shallow theta, and then all of a sudden at 30, it just like dips big time. So that options price really decays quickly after 30 days until 14 days, where it slows down again. So we're like, okay, well, if that's like the right time frame, then why are we trading so long, in the future? So this BKR trade has been around for a while. Watch, let me see if I can show you that BKR. So the 34 days is left, so that's actually right, good. But BKR, where are you? That's interesting. It doesn't show the close, so that's another thing that we need to address with Claude, because we did a flat exit yesterday on BKR, so it should show it here as a recent close, but it doesn't. So I want to see. I don't see it. It's just, oh, okay. So this is 34 days held, but I believe that's only on. I have to look at. Let me actually look in the past. Let me do this. BKR. 33 days. $86. I'm looking for, I don't think we even had that portion back then, to be honest. Like right now you can see that we have this days held. That's what I'm looking for. we don't have. So you can see some of these like held 44 days, held 50 days. Like that's just ridiculous. So, the more recent ones we're holding for, 14 days is kind of the target now. So you'll start to see like some of these old ones like really held, quite a while, and it allowed them to drift. Some of these were just mistakes. Like these two, I just closed them incorrectly. Like they actually would have been positive, but you know, this is a system that we're learning. So that's the nature of it. Um, yeah. Anyways, I'm getting off track here. So, anyways, BKR. Bottom line is, it was a really long DTE, I think, and then we ended up allowing to drift, and then we rolled out. I think it was down and out, right? And now we're basically coming up because that was at a 55, I believe. So like right here. So you can see that we're steadily approaching that. BKR. All right, so what is it asking us to do? So we need to just basically, oh, we don't need to do anything on this because it thinks that the end zone, end zone, it's not even telling me anything to do. It just says event risk. So we need to address that. So like, why is that even showing up? Because we want this section to be like, okay, this action is exactly what you need to do. These are just warnings. So approaching the short call. So let's look at this one. 180. So we're 185. So yeah, so it's definitely approaching like 2.4 on the call side. Let's see, we're only 3 days in on that one. Yeah, so that's probably not too good. We're positive 64, right, $63 right now. So we could basically exit or flat close the call side and let the put side expire worthless. So that might give us some, ability to capture some cash without, like basically mitigating a loss. Let's see what we got. BKR, BKNG, 180, 185. So, I mean, we're still decent, but I think I'm going to hold onto this one for a sec because I actually want to. Oh, okay. So whenever I see this, like this, see that huge, they call it a flagpole, I think. You see a huge flagpole, that means something changed. So usually what I'll do is I'll ask CARA, let's say something like this. Let's see what day exactly. So that's 6/24. Let's see what else. What other information can I give? So it's like decent volume day, a little bit of volume spike, but not too much. We had a huge jump in HV. So that's going to be a flagpole, and this should come back down. So huge flagpole. Was there some event we missed? Do a deep search. So this is going to access Tavaly. So CARA has like certain tools that she can access, and we built in like, whenever I say do a deep search, then she goes ahead and use Tavaly deep search. And then she's going to look for basically any type of events that happen with BKNG. Usually it's like CEOs spoke about something and it was like a really good thing and everybody's like super excited about it. So we usually find stuff like that. And this is a deep search, so it does take, a little bit of time. But yeah, we're looking for conferences. We're looking for interesting. You should give back nothing. Next earnings is 7/29. Sharp intraday reaction. Technical breakdown. So yeah, so nothing so far. But this is the market. The market's unpredictable. So we're trying to be right 80% of the time. if we can. And this, fortunately, we have these tools in place that are saying, hey, you know what, this is off regime. This is off of our hypothesis. Our hypothesis was, between here and here. You can see that this already broke out of the Bollinger Band. So that's a change in consensus. That's like people are thinking something differently about this stock. Something happened here. So you can see everybody kind of agrees. There's this nice little flow. I call it oscillation, right? So you get this nice oscillation. You still got the 90, the blue line, the 90 and the 30 are basically in agreement, but it looks like we're starting to kind of do this uptrend here. So yeah, so it's this is off our trading hypothesis, so we need to mitigate this. Because it's looking like it's going to be on the upward trend, I'm probably just going to flat exit this top part, the call side. So I think we can still kind of salvage a little bit of profit on the call side and then let the put side expire worthless. Let me just go ahead and do that real quick just so we can kind of see it. So I'm going to take these the puts off, and then so we can actually roll. If we roll, so small. Sorry guys. Let's see. If we were to roll, so the roll is going to take us to the next DTE, but it's kind of dangerous because it keeps the, oh, why is it so weird? Oh no, it keeps the strikes the same. So you're basically just buying yourself time. So, okay, so like, we're in danger of hitting the the 185 right here, like in the next couple days. But we're like, okay, well, let's give us another week or whatever it is to hit that same thing. It really just gives you time to go over and then come back down, which is a possibility here. But given that the 90 days like on this little this, what do you call it, a valley, right? So it looks like it's heading back up. The 30 looks like it's heading up. The the 7 day is going to oscillate, so that's, don't necessarily look at that too much. And they're trading underneath the 300, so that tells me, okay, the tendency is to go back to the MAs, right? So the MAs typically want to converge and they oscillate around each other. So that's what we're looking for. So I'm thinking that it doesn't make sense to roll up and out, or out. It could make sense to roll up and out, but I mean, even if we rolled up, we'd have to go like 195, I think. Let me see if there's any liquidity there. So 195, and that would be 29. Oh, there's nothing. There's not even liquidity at all. So it doesn't even make any sense. So what we're gonna have to do is, I mean, there's a little bit. Let's see, we're 95. Yeah, not even close. So it doesn't even make sense. So what we're gonna just do is close this call side. The call side, right? Yeah, 185. So if we close it right now, and then that's what we're gonna get, which is probably not great, but stop. It should be snoozed already. Oh well, I'll do that later. What is it? BKNG trade. Let me see if she picks that up. I don't want to keep saying that over and over. So she's saving the screenshot. She's reading it. So we got a buyback order, right? So that's basically a flat exit. Call spread buyback order. And then got it. There's a close order. We're buying back, blah, blah, blah. Okay, so we're doing a debit. Yeah, 210, is that right? 210? Yep. 10 contracts. Did this order fill yet? No, it didn't. So she shouldn't be asking me, did this fill? She should know it's not filled yet because I have to send the fill order or the fill screenshot. Okay, so she's waiting to log that, but she's saying, okay, so now we've got activity here. Oh, it did actually fill. Filled right away, look at that. That's pretty good. So let's go here. So now she's processing the fill, so you can see it's, you know, a closed fill. And this is all, so under the covers, for the image processing, we auto elevate to sonnet, and then so she typically speaks on haiku. So whenever I just send random messages to her, she processes it with haiku. Haiku says, okay, let me see what you're trying to do. There's a tool for that, sends it over to a tool. The tools all have this auto model escalation mechanism. So processing, you know, these fill orders and the, you know, all this stuff, like all this comes from a tool. So so 190, let me see, I didn't even look at it. Yeah, 190, so that's good. 190, yeah, trade ID 27, because that's the newer one. Yep, that's right. Call side. Okay, so 155. So what did we get? So we lost 470, which, you know, that's much better than max loss, right? So the idea is that if we're able to hit a 80% win rate, right? So we're winning 80% at max profit, or I guess, or less, any type of profit, I guess. But then on the loss side, we're mitigating that max loss to, I mean, if we can keep it at 20% of the time, but also maybe 20% of the max loss, I mean, that we're gonna win in the long run on that. So that's pretty much what we're trying to do here. So yeah, looks correct. So now she's gonna log that trade. We recently, like maybe I want to say a week ago, we we restructured the database so that we have we log each leg independently. So now we have this mechanism now. You're all set. Boom. Okay, so back to, so we handled that. BKR is fine. We need to talk to Claude about that, why it's still showing that as in danger. AMT is not looking great, guys. So let's see. We need to figure out, okay, why did we even get this trade as our, well, we already answered the question because AMT came back as the selection for the day, but that was based on the miscalculated deltas. So look at this big, huge decline. So, you know, we probably could have called it up here, but yeah, so we're still heading down. So you can see the MACD still diverging. I mean, RSI is getting pretty low, so that means, you know, a lot of times that indicates a change of direction. So as soon as it, you know, it starts getting into the 20 range, this is so small. But on my other screen, I can show, like, you know, I typically say, okay, what does the RSI like to stay around? It, you know, RSI oscillates just like everything else, right? So I'm like, okay, what's the bottom that is typical for this stock? And usually that can kind of tell me, all right, it's probably getting ready to turn around. And this does kind of like, so we've got this oscillation here on the 7-day around the 90 and the 30, which agree right now. And they are below the 300, so I would imagine some sort of upswing. But this is a psychological event right here. People are just like, they're not feeling like, okay, you know, I'm losing money on this. I gotta exit, right? So this is like something bad happened, probably like, I'd say like around here. So there was this big flagpole here, and then people were just like, nah, something happened weird. So let's actually do a search on that one. Let's see, what day is this? 6/8, 6/4, and then 6/8. Hmm. Can't type today. AMT around 6/8. Wow, we're drawing blanks on these deep searches, so that's interesting. So like she shouldn't be asking if we're managing a position. She knows that we have an open position. Um, yeah, but anyways, so we gotta basically protect ourselves on this. So let's see, what's the right move here? So the idea is that, I think I said this already, but the idea is that this summary, it tells us here, this is what you need to do, right? So we've got a gap up. It says exit completely. So that's correct actually in this one. What's our trade here? So we're at so 165. Yeah. Why does this look backwards? No, that's right. 170, 190. So we're already ITM on this one. We were gonna take a loss on this too. So that's not good. But we're not gonna take max loss. That's what's important. So she's got access to our database of trades. So, you know, when I'm sending these screenshots, she's basically saying, okay, she's processing it. Give me the legs. Give me the, you know, give me the basically the limit, the daily limit, and then she's saying, okay, comparing that to what our existing trade. Let's see, should we do long? Yeah, working on the close order. July 17, low confidence parse on this one. Oh, so she wasn't able to parse the image very well. 240. Yep, that's right. So it's 165, 170, 190, 195. Yeah. Oh, that's backwards. So it's short 170 P. Wait, right? Yeah. 165 put, and then short 190 call, long 195. Like that's like, it doesn't even make sense the way she put it. It's like backwards. Oh, I see. No, she's right because we're reversing. Long, yeah. Oh, I see what's going on. So I'm thinking the original trade, but this is actually the reversal. Like that. Yeah, so she actually was right. So good. So I really only need to say you are correct instead of type all that out, but that's okay. Let's see if it filled. Yep, filled right away. We're having good luck with fills today. A lot of times we gotta fight for it, but another reason we want to close these, especially when we're ITM on the short leg, on one of the short legs, is because if we let that expire, especially on the put side, we'll end up with shares. That's just exactly what happened with Schwab. So we've got these Schwab shares right here, 100, because we got assigned. we expired. We let that trade go because this is an early one. We didn't even have like the mitigation strategy in place yet. So early on, it was just place the trade and let it go to expiry, right? So, and you know, this system's only like probably a little over a month old. So, but yeah, so those early trades, we let them go to expiration, and then Schwab expired between the short put and the long put, so right inside here. And what happens at that point is you actually get assigned the shares. So not only do we lose our premium, but we get the shares. But it's not that bad because we actually got assigned at 89 as a basis, and now we're at like 92, which is fine. But then what we do is we place a covered call on top of it. So we make money when those covered calls expire worthless. It's like $90 because this is only a single contract. But we keep doing that until the stock comes back up to 95. When it hits 95, our covered call gets called away. So our shares get called away, and then we make the $95. So a difference of $6 per share, which is not, it's not nothing. And then we also make as much on whatever covered calls we place in the meantime. So it's actually not a terrible thing. But on the call side, it's it's not as good because you end up, let me see, I'm not certain how it works, but let's say you have a short call and then you've got a long call and you expire worthless in between them, then that means that you're obligated to sell 100 shares per contract, off, right? Because somebody's on the other side of that bought those, right? So you end up with a negative number of shares on margin, which is not the greatest situation. I feel like that's the most dangerous situation in options in trading condors. So, anyways, that one failed. Let's see what she said. So realized, negative 712, which is not terrible because I think max loss is probably like in the couple thousand or something like that. So, and again, this is a paper account, so it doesn't matter as much. We're using the paper account to practice until we get the system right, and then I'll be putting it on my own personal account so that we can really test it out, put my own money on it before we even entertain thinking that this thing is successful or profitable. Yeah, 2-day hold. Yeah, see, we that was pretty bad. We need to analyze. We need to why we selected this. So she's probably going to try to analyze it right now, but really I'm just saying that so that later when I put Claude's going to assess the entire conversation, and Claude will see that message from me, and it'll take that question and run with it. Okay. I mean, that's some good information. I'm not going to read all that right now, but that's good information to have in the conversation. Then we can kind of like use that as an assessment during the debrief. Okay, so that's all of our action items that we need to do. We took care of all of these. Actually, this one is nothing to do there. So you can see so those are the two we took care of, but the rest of them were looking pretty decent. Obviously, that's just a 1-day hold, right? But these guys are doing okay. 15% on the put side, so that's not great. But let me see, target. Let's take this off. Target. Oh, so we only have a put side on this one, so 115. Oh, yeah. So 115. So we're riding underneath. I think we did a flat exit on the call side on this one. Look at that big old flagpole right there too. So that's actually good for us in this situation. I think we exited that profitable. So now we just wait till so we made a little bit of money on that, not too much, but everything counts. So BP, that is, I can't remember what that sounds. Bear put. So okay, so we're in a bear put status right now. No, oh, it should be a bull put. Yeah, so bull put status, right? Because our option leg is underneath at the 115 mark, so that's like way down here. So we're super safe. Yeah, so 115, 120. Oh, actually 120. So we're right here in the short. And look at all that support. That's like tons of support at that level. So this guy, those guys, those guys, those guys. So yeah, that's the short right there. So anyways, so that's that. I think we're ready for the daily trade, right? Actually, let me just go through this again. That's doing good. So ETN is looking pretty decent. BA is looking okay. It's still new. So 10 days. So we're actually getting ready to get rid of this So we can probably close this here in the next couple days. This one would probably close for pretty decent profit here. And then we usually try to get to 30 or 50% profit. So once this gets to 3,030, then that's when it's going to start telling me to exit. But we'll see how it does. 22 held for 10. So we opened this at 32 days, I guess, 32-day DTE. So we'll see how it goes. That should be right in the benefit zone, I guess. Nine, so that one's looking pretty decent, and that one's looking decent. Okay, cool. So we already handled that. That's our holdings. So all-time P&L. So you know, this is not looking great, but this is a very, very new system. So I feel like we're out of 15 closes. We're at 40% win rate right now. Not great, but we're trying to bump this up to 80%. So figuring out why we're selecting the trades that we are selecting. Now with new mitigation in place, we can capture some of those. Even if we get small positive profit, like let's say we make $20 when we would have lost 2,000, like that's a win in my book. So I think the win loss is just basically did we make positive profit? See, this one is nothing, right? Or did we lose, right? So some of the larger losses are the early ones. WFC, yeah. So even this one, we were supposed to win on this one, and I didn't close it right. I don't know. I'm just still getting experience with this stuff too. So some of these would have actually turned out right, but I made mistakes. Yeah, some of these were good mitigation, and these ones were just bad, being honest. Yeah, so anyways, so that's that. I think we're ready to do the daily trade now. Okay, I gotta grab my screenshot. So what I usually do is I set up this scanner here, and it's just basically a couple filters, nothing too crazy. It's just kind of trying to get a list of stocks that we can look at. This is what I started using in the beginning. I was just using this primarily to select stocks, and then I would go through manually and try to figure out if it's condor, if it's even looks like a condor. A lot of times it didn't work out, but sometimes it did. So let me do this. Dang, my battery's already dying. And let me turn the screen back up. So I have this microphone has this plug that goes right into my USB port, but it blocks the other USB port that my charger has to go in. So right now I can't charge and have the microphone at the same time. So that's kind of like why we're here. But I have an extension cable coming. So for videos moving forward, it should be better. Let's see. Okay, so it processes the image here. It says, okay, I got 1, 2, 3, 4, 5, 6. Microsoft, Cisco, Apple, blah, blah, blah. Right, so it scans 6. We already have those. So what it does, it says, do we have those in our ticker? I call it the tickerverse. Do we already have them in our tickerverse? If we do, then we're okay. So we don't need to look at them. Otherwise, we need to add them to our tickerverse so that they start getting into the nightly process. Every night we process all the tickers in our tickerverse. I think it's like 2,800 right now. And we grab a year's worth of data, and we do a bunch of pre-calculations on them so that the next morning when we do this trade, we have some information that we can filter off of. So that's what's going on. So one of them being sideways, like are these, one of those calculations is the price action moving sideways for the last, I think it's 30 days that we use, something like that. So anyways, yeah, so only 15 came back from our tickerverse, right? And then do we have active trades? We do, BKR, so we filtered that out. We can't put another trade on that we already have on the same ticker we have. And then we have the scoring mechanism. So this is like how it filtered from the 28 all the way down to the 16, right? So this one came from the Thinkorswim, right? So that's going to be JEF. So JEF, boom, Jeffrey. but the rest of them came from our tickerverse, and they all say their side the regime. So this is actually HMM model sideways. That's a volatility thing. So this is uh, historical volatility at 30-day snapshot out, and then this is historical volatility slope, like from that 30 days to recently. I think it works in 3 batches, so it's like 30 days, 20 days, 10 days to now, and that creates a slope for us, so we can tell if it's calming or if it's becoming aggravated or something like that. So the regime also, this HMM model is supposed to determine whether the volatility is sideways or if it's directional or what, but I found that it's not super reliable, to be honest. So this P sideways is price sideways, so the one means it's definitely sideways, and I guess we can take a look, but we don't have a ton of time. Let me just do this real quick. I wouldn't say that sideways. I usually look at it on the 6 month. Yeah, I wouldn't say that sideways, to be honest, but I guess we'll have to look at that. And then there's some that failed. Slope check. So that's basically checking this same thing. So this guy right here. So is it between 15 and 30? And are they? They're not actually. So oh yeah, 30. So it's absolute, I guess. I'm gonna have to confirm that. And then we check for events like earnings, or so Jeff has earnings right here. Yep, 1 day ago. So we look 7 days back and then 30 days in the future. So we want to make sure, because that's what happened to us with ATI. ATI had this huge conference, and they put all this new products out and got this new contract or whatever. The momentum didn't start. That event happened like 2 days prior to us placing the trade, and we didn't know about it. And then it was on a delay, and then 2 days into our trade, boom, it just took off like a rocket, and totally lost our, we hit max loss on that one. So these are a condor scoring mechanism. So I've got 3 strong ones and a moderate one, non-trending. So these guys should be sideways. Like when you get to this point, you're talking about trades that should be sideways. Yeah, so that's super sideways. Yeah, that's the shape that we want. We want this big Bollinger Band, and then we want straight from there. So that's pretty good. So I'm not going to go through all of them, but you should expect a similar shape on pretty much all these. And the score, it's sorted by score. So yeah, so pretty sideways. So that's what we're looking for. So we want to catch this. All we got to stay, we just have to be right for 14 days, right? So that's like, this is across a couple months. So if we place a condor in this one wide enough, we would be right, So those are the ones that we're trying to find. So not proceeding on those. Then out of the 4, what are the viable ones? Looks like we got UPS. These all got rejected for various reasons. No. So yeah. So I still haven't gone through like these with the fine tooth comb and been like, okay, why exactly did they get rejected? Is that accurate? So we're still kind of trusting this a little bit. This is the model that we built for now, and then we're gonna have to keep tweaking it until it's correct. Just like what we did last night with the Black-Scholes. So yeah, it's saying 95 100, then 115 220 120. Yeah, see, I even think 100 is too tight in my opinion. Like I'd want to be like more around here, so I'd want our short to be 95. And what did it say? 120, 115, 120. So 115, like that one's okay. Like we got all the support right over here, or resistance, I mean. And then 120 up here. So that's actually max, probably max high, right? Oh no, it's on the down. So yeah, but max in 6 months. So that's our all-time high in 6 months. RSI is looking pretty decent. I mean RSI right here. These charts are so small on the screen. So RSI right here at the around the 50 range. MACD's looking like it's converging. This histogram's super small, which is a good sign. We've got our HVs kind of like on a little bit of a decline. It's kind of like an up here, but then down. So That's, still a good sign. You want to be like in the 40s, like, 30 to 50 range, so that's pretty good. So let's try to place this bad boy and see what we get. Okay, so I'm gonna look at the chain first, and what did it give us? 21. Yeah, everybody's still trading the 20, the July 17. Okay, so let's look for our 20 delta. That's this guy, so 103. We might have a low. See, let's see, 20. So that's not great. Everybody wants to trade this, the 29, which is weird. 13. 100, 105. That's what it gave us, huh? Oh, 195. Interesting. That's actually probably better. 95. Yeah, that's pretty decent. 06. That's interesting. 0.14 and a 0.06. That looks not right. Let's see, 95. Let's see, 95 and 90. That's actually decent. But the deltas are so small. I don't even think, yeah, our credit is going to be so low. There's like no credit in there. I think that's why it's moving up. 105. So if we did 105 and 100, but that's not even what it selected, right? It selected 95, 100. So 95 is here, and 100 is here. So 60. Yeah, this is going to be super, super low profit. $22. Let's do 95 and 100. And then on the call side, we're at 115, 120. For 110. I mean, it's not crazy. It's not terrible. This screen is so small. So 2509. So weird. So if we did want to do a 20, yeah, 116. But I think I'm okay with a 25 in this situation just because that's where the liquidity is. And like, if we go down more, it's like there's like zero credit. So this is already a pretty low credit trade as it is. So this is a small one. I don't know. We might get in trouble with this one, but I guess we're gonna find out. I mean, on the put side, we're okay, and that's actually the one that I was thinking we're gonna struggle with. I mean, there is this big run up right here. 115, 120. All right, let's go as is. 61% probability of profit. So 105 is what they're calculating. 110, so we're a little bit above that, and 395 max loss, which is actually less. It'll be like 390 now if we get the 110. So that's not a very big spread, but it's a low price stock, so I think that's kind of why. Expected value is $3 per contract. Not great. So we would have to hold this for 16 days, which is not also not great. So some of these factors are coming into play and making it seem like it's not a great trade, to be honest. But we'll place it anyway, and then we'll see kind of like how it does, and it'll just give us more information for making future decisions. So I'm just gonna wiggle this here real quick. Try to update the spread here. Oh, so now it's 104, 103. Let's see. Okay, that's placed. I mean, this is actually kind of good because we want to get to the point where we're ending up going with the best trade recommendations as is. Like that's the entire point. Get our filtration to the point where the best trade that we ultimately end up with is the one that we go with, because ultimately you want this system to place the trade on its own. So if over time, let's say 6 months from now, every single day we're placing that best trade, okay, we're feeling pretty confident that the system is selecting the right stuff. So um, that's kind of where we're at. Let's see what happened. Not filling. This thing's moving pretty hot right now. I wonder why, actually. That's interesting. Yeah, it's like moving on the move. UPS. Okay, we're gonna let that work for a little bit. We're at, let's see, are we below? What's our? So we're at 103 and it's at 104.5. So yeah, it's decent. I mean, I could drop it here. Let me go to. I mean, I don't want to go too low because I want as much credit on this one as possible. It's so low. It's such a low credit stock. Anyways, we're gonna let that sit, and then we'll do a debrief here. Actually, no, I want to fill first before I do the debrief. So let's fill. Let's go to 01. I feel like the liquidity was there, right? I mean, let's look. Oh, so it's not getting any volume. It's this guy. This guy's not getting volume. So these are trading. Those are trading. I think we're good on the call side. This guy's even probably okay. It's just this one. So like when we trade these condors, it's like a full package of 4 legs. So it's like one buyer has to buy the entire thing. So if they're not interested in this 95 strike, it's not gonna fill. So I'm just gonna leave it there. And you know what? If we end the day with and expire, then I think that's okay. I don't want to put that down too much. We're already at 101, and that's too low for me, to be honest. So, and this is already not looking like a great trade to begin with. So, it is what it is. So, anyways, let's just say. And I'll watch it throughout the day and just kind of see. I actually might put it back up to 103. Okay, so there's that. And that's basically our work for the day. Let's see how much battery I got. I got 16 minutes. Okay, so I'm going to do a quick debrief. I don't think I have too much, to be honest, on the debrief side, but I'm going to have Claude just take a look real quick. So I'm just gonna let him kind of pull all the stuff, and then he'll come up with a summary, and then I'll stop the video, and then I'll continue again later tonight, like I did yesterday. So we can see that. I just don't want to run out of battery here and then cut off mid film or whatever. So on it, pulling. So what he does is he basically pulls the entire conversation that I had with CARA today. and then he's going to go through, okay, all of our mitigation steps, like how did those go? We'll look at the summary together. Sometimes it really depends on what we find that day, but um, he's going to notice that our best trade worked. So that's actually good. Yeah, exactly. So he's already looking at if our new delta stuff worked. Okay. Well, I'm just gonna. This is taking a little bit long, so I'm just gonna go ahead and call it a day. Definitely leave your comments or ask questions that we can answer. Um, Definitely not a pro or anything like that, but we'll answer those questions together. We'll do some research and stuff like that. We'll lean on Claude a little bit to answer questions. So if you guys are curious about anything, just let me know. We'll get some answers for you. Um, Even if they're not the right answers, we'll see, I guess. But yeah, leave us comments. Obviously, like the video. If you want to follow along with the build process, go ahead and subscribe. And yeah, we'll see you guys on the next one.